Hello, I'm Kat Mann, Head of PR and Savings and Investment Specialist here at Nutmeg. In this issue of Nutmeg Explores, I'll be speaking to our Head of Trading, Jason Conan-Davies, about Nutmeg's in-house trading experts, our approach to trading, and how we use fractional shares to help clients achieve their financial goals. Jason, some people might not know Nutmeg has an in-house trading team. Can you tell us a little bit more about yourself and the team?
Hi, Kat. So I'm Jason, Head of Trading here at Nutmeg. I've been with the Nutmeg team for nearly 4 years now, so I've been around for a large part of Nutmeg's recent growth. There are 3 of us in the trading team at present, myself, a senior trader, and a trader. Our job is to execute trades and to get the best possible prices for customers when doing so. We currently only trade exchange-traded funds here at Nutmeg, and we work closely with the investment team to develop strategies to execute trades. We also monitor the markets carefully and share our insights with the investment team regularly. We focus on building strong relationships with market participants, including ETF providers and market counterparties. We trade with the major investment banks and ETF-specific market makers. We use our experience and knowledge of the market to develop trading strategies that ensure we get the best execution we can for customers.
Broadly speaking, there are 2 different ways to trade, over the counter or on exchange. Can you briefly explain the difference and how we trade at Nutmeg?
So on-exchange trading refers to trading activities of buyers and sellers on the secondary market that takes place on a centralized exchange, for example, the London Stock Exchange. This is generally the most visible source of ETF trading. However, in Europe, a lot of ETF trading takes place off-exchange in the form of over-the-counter or OTC trading. This means there's a lot more liquidity to be found OTC. Here at Nutmeg, our primary choice is to trade OTC, as our typical trade is of a size where trading OTC delivers the best prices that we can get, better prices than trading in other ways. In fact, when we trade OTC, we actually benchmark our performance of each trade by using the prices quoted on exchange via the exchange order book at the exact millisecond we executed OTC. For context, in February this year alone, we saved customers over £1 million in our execution versus the on-exchange prices at the exact times we executed our trades. However, if the trade is of a sufficient size, we can still utilize some of the liquidity being offered on exchange on the secondary market order book. We can also even access the primary market ETF liquidity if the trade is of a sufficient size where we need even greater amounts of liquidity. The key takeaway here is that we're very flexible in how we handle each trade, and there are many factors that influence our decision on how to trade an ETF. Factors such as the size of the ETF trade, the liquidity of the underlying stock, or the type of ETF that we're trading. So whether it's a fixed income trade or equity-based ETF trade or commodity-based ETF trade, all of these things trade differently.
Nutmeg could outsource our trading to a third party. So what are the benefits for Nutmeg clients to having an in-house trading team?
So one of the primary benefits of completing trade in-house is cost. If we were to outsource trading to a brokerage firm, for example, there would be commissions that we would be charged. Here at Nutmeg, we charge no commission on trades. The only associated costs with trading are the costs associated with spread. As we only trade for Nutmeg customers, we can give each trade the required attention and care that results in better execution. Whereas most brokerage firms have orders to execute for multiple clients and therefore may adopt an approach that focuses on executing a large number of trades as quickly as possible, we can focus on quality execution and tailor our approach acutely for whatever the market conditions currently are, or the attributes of the stocks that we're trading. As our approach is unique, we have built very strong relationships with market makers and counterparties. These counterparties understand our objectives well, and they can position themselves to meet our demand, which also results in better execution. Our trading practices are held in high esteem by these counterparties, and we regularly take part in ETF conference events hosted by these counterparties and even trading platforms that we use. Most counterparties use a tiering system that determines how well they can price a counterparty they're trading with. We are a top-tier counterparty for all of our trading counterparties due to the sophisticated way we trade and our reputation within the industry. This also results in better pricing. We were one of the first buy-side counterparties for one of the largest ETF market makers in Europe, so we have built up a strong reputation over the years and have a lot of experience trading ETFs.
What does a typical trading day involve?
So we build individual trades for each customer. For customers looking to invest, we create buy trades of ETFs that make up their portfolios. For client requests to withdraw, we create sell trades. We aggregate these client trades over a certain period, usually 2 to 3 working days. and we typically trade 2 times a week. So on a trade day, we can have up to 2 million of these client trades, which are automatically built by our in-house trading blotter, which was built and maintained by our very own software engineers. We are able to net trades internally, so we net customer buys and sells of any given ETF on a trade date. This creates a single net trade of each ETF, which we then go to market and trade. We typically net about 25% of all client trades, which improves efficiency of our trading and reduces costs. The netting of trades is also seen in a favorable light by our counterparties and makes us an ideal counterparty to trade with, as we are not always going to market with multiple trades of the same asset in different directions in a short space of time.
Nutmeg was an early adopter of fractional trading. Can you tell us what this is and why it's important for clients?
Fractional share trading essentially means we're able to provide fully diversified portfolios for very small amounts of invested cash. We can buy and sell as little as 1 pence in any ETF, as opposed to whole shares, some of which can be expensive. By offering fractional shares, it means money can be invested more precisely. It also means we have more reasonable minimums. You can have a fully diverse portfolio, whether you invest £500 or £500,000. People think you need a lot of money to invest, but fractional trading means we can create trades for as little as £10 even, as long as you have met the minimum threshold for your portfolio value.
Thanks, Jason, and thank you for joining us. We'll be using the Nutmeg Explores series to take a more detailed look at different themes, processes, and investment topics. If there's something you'd like us to cover, please contact us via social media or in the comments section below. We look forward to seeing you again soon.